So you're going to have to go back and you're going to have to review this yourself when I'm done, because I can't go through every single detail on every slide.
It's just, you can't or you don't want to.
Well, it's very heavy and you won't remember it. But here's my question to you.
Okay.
We are talking about 0 day. This is Thursdays. We do 0 days. When trading 0 day, 0 DTE, SPX options, okay? Now, we all know that Tony and I are both contrarians. When markets go down, we like to buy them. When they go up, we like to sell them. You know, we love the contrarian logic. It stems from being a market maker and taking the opposite side of everything, kind of like being the house mentality. So we're generally contrarians. But in the 0 days, we don't play a lot of contrarian games on 0 days. And there's a reason for that. In 0 days, it's much harder to be, if they open up, we're not necessarily going to get short. If they open down, we're not necessarily going to get long.
To be fair, we typically say, let's wait a day or two. Like, you know, I mean, we really
intraday, if you asked me, does it pay to be a contrarian on the 0 day? I would probably say no.
Yeah, to be fair.
Intraday, you know, we'll play for reversals sometimes. I guess I played for reversal in Circle and things like that. But
individual stocks. And also we look at it more from an implied volatility standpoint.
Yeah.
Like if markets go lower and puts are bid, that, you know, it makes it an easier sale to sell puts to be a contrarian in something. Because even if the stock goes a little bit lower the next day, volatility typically will contract. I mean, the fear is over.
So we play the contrarian game mostly all the time. But in 0 DTs, we play kind of an at-the-money short premium game, and we don't necessarily play the contrarian game. I don't know if that's the right way. I think it's the right way. I think if you try to play the contrarian game intraday, it's not going to work that well. But we asked the research team to test that. Let's go, Beth, and let's see what the results are. In light of the efficient market hypothesis, we often like to stick to delta neutral trades. That's very fair. But the 0 day option markets give modern retail option traders more opportunities than ever before to try different things. Several viewers have written to us, more than a few, have written to us about their success selling verticals when the recent market moves seem to make it prudent. Let's open up a data set, put it to test. When searching for directional signals, there are numerous adjustments and things to consider. We're going to begin by exploring the contrarian approach. We're going to sell calls following an up move and sell puts following a down move in the 0 day. Normally, I would say, sure, that's what we do.
Yep.
But in the 0 day, maybe a little different. Next slide, please. So 2 years worth of data, 0 DT premium, 9 a.m. in the morning, Central Time, half hour after the opening. If the move from the previous SPX open to today SPX open was less than the expected move, we sold the at-the-money butterfly. Okay. If the SPX was down by more than the expected move, we sold a put vertical, short strike at the money. If the SPX was up by more than the expected move, we sold a $10 wide vertical, short strike at the money. Right?
Okay.
Got that?
So far.
Next slide, Beth.
I'd like to save that slide. That's why we have to go back and look at this.
We repeated the analysis using iron condors and verticals as well, with a short 30 delta and 20 delta strikes and $20 wings. We further iterated on the process using other multiples of the expected move as a threshold, ranging from 0, being the directional every day, to 1.5 times, which only triggered 5% of the time. At the money positions were closed if they reached 10% of max profit, while out of the money positions were held looking for 25%. Losers expired.
Okay.
All right? There is so much stuff in here.
Yeah, it's a lot.
So we're doing contrarian stuff, then we're doing contrarian using iron condors and vertical trades, and depending on the size of the move, so there's everything in here. That's why I said, just warning you now, you're going to have to go back to it. There's like 6 pages of slides. You'll go back to it later and you'll check it out for whatever you're looking for, right?
Yep.
Let's go to the next slide. The first one is short at the money, like a short at the money straddle is a butterfly with $10 wings. Okay. So actually, no, they're all here. Short put vertical, short call verticals.
Yeah, they got them there.
Short iron butterflies.
Taking profits at 10%.
Okay, there's two important takeaways in the first slide. Number one, put verticals actually worked. Call verticals did not. And iron flies, which is what we essentially, a version of what we do, work the best.
Sure, lowest CVAR too.
Okay? Lowest risk too.
And you would expect that with the market being higher.
Essentially saying the zero delta non-directional plays were the best. And if you faded the up moves, I'm sorry. Yeah, if you faded the up moves, it didn't work. If you faded the down moves, it worked okay. But that makes sense because the market's rallied 3,000 points the last couple of years. Let's go next slide. So this one is short at the money with $10 wings, same as before, but this time we're going to look at being a contrarian every day and then inside of certain moves. And the answer here is that everything was profitable except when you were at everyday contrarian. So you had to kind of hope that you had, a reasonable move.
Mm-hmm.
And for reasonable moves, okay, essentially
everything worked reasonably.
Everything worked reasonably. Good probability of profit too. Good win percentage. Yep. Let's go next slide. So now we get into like the short the 30 delta with $20 wings and 25% profit targets here. And what's really interesting is, again, the put verticals worked, the call verticals did not. So if you sold a put vertical into after a down move, it worked great. Mm-hmm. If you sold a call vertical after an up move, it failed. And iron condor is Let's go next slide. High win percentage.
Yeah, high win percentage.
Here we go with the short 30 delta wing, short 30 deltas and 20 delta wings. Very high win percentage, but contrarian every day, lost. Contrarian when the move was greater than 5%, lost. I mean, this was not a great result playing the contrarian to everything here.
No, you're going to 25% target here too, which is
the 25% target just didn't work.
Reasonable though.
Let's go next slide. Now we go further away. This should work, except the put verticals again worked. The call verticals did not. There's definitely a trend here, and the iron condors were fine. Mm-hmm. The bottom line here is your win percentage huge, but selling call verticals after an up move did not work in the 0 days. Selling put verticals after a down move did work. Iron condors, they always work in this case for short profits. Let's go to the last slide or the last. Yeah. So essentially the same kind of data, really high win percentage, except it seems like when you wait for 25% and you're a contrarian every day, it just doesn't work. Mm-hmm. And you need a bigger move. And again, I'm going to just argue the put spreads worked, the call spreads didn't, and the at the money strangles or iron condors did. Let's go to the last slide. For out of the money traders, put selling was the overall most profitable approach to zero DTE option markets, which is,
obviously, we're all-time highs.
Which we wrote here, which is unsurprising as the SPX has gone from 3,800 to 6,200. Or not surprising, unsurprising. For larger credits from delta neutral positions, they helped reduce downside risk for at-the-money traders. It was enough to give the edge to iron butterflies. When trying to pick direction, looking to be a contrarian and bet against the recent market moves was counterproductive, with the best results occurring for very high thresholds, very high signal thresholds, which approach the success of never being directional. If contrarian signaling was unhelpful for finding zero DTE success, what about trying to follow momentum? Tune in next week to find out.
Oh, cliffhanger.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.